Okay, let's go to microphone number 2.
Good morning, Mr. Buffett and Mr. Munger. If you want to trade a share of Berkshire A for 30 shares of Berkshire B, as you had mentioned before, a personal stock split, or vice versa, is this considered a wash sale for tax purposes? Also, I'd like to ask you a question which you've heard before, but in a slightly different context. A few years ago, you said you had made a mistake by not buying shares of the major pharmaceutical companies around 1993. You cited their value to society, as well as their terrific growth, high profit margins, and great potential. You said that while you didn't know which companies would do the best, you could have made some kind of sector play because the entire sector had been decimated. These exact same words, including those about not knowing which businesses will dominate over time, can also be used to describe another industry which has recently been decimated. This industry is, of course, technology. How do you see these two investment ideas, pharmaceuticals in '93 and technology now, and what difference in the two situations makes the first a good opportunity for Berkshire and the second not one?
Well, Charlie answers all the questions about mistakes, so I will turn the second question over to him.
Personally, I think that the future of the pharmaceutical industry was easier to predict than the future of the high technology sector. In the pharmaceutical sector, almost everybody did well, and some companies did extremely well. In the other sector, where there are many permanent casualties in the high-tech sector.
Yeah, I would say that there's certainly nothing obvious to us about the fact that the tech sector as a group, or viewed in aggregate, would be a good buy or be undervalued, whereas we should have had enough sense to recognize that the pharmaceutical industry as a group was undervalued. But the pharmaceutical industry has a far better record of returns on large amounts of equity over time, and with a high percentage of the participants having those returns than the tech industry. I wouldn't regard those two as comparable at all. Your first question about exchanging and whether you have a wash sale, and I think you indicated exchanging from B into A. If you actually physically have a share of A and turn it in for 30 shares of B, that is not a taxable transaction. So there is no sale under such a circumstance. There would be no reason, unless the B was at a significant discount, to actually sell the A and buy the B. But I'm not giving tax advice on this, but I would think that I think the tax code refers to substantially identical securities when they talk about wash sales. And I would think that the IRS would be entitled to at least raise the question if you had an A share you were selling at a loss and replacing it with 30 shares of B. You'd have a better argument than if you bought a share of A back the next day. If you were establishing a loss. If you're establishing a gain, you'd have no reason. They're not worried about wash sales in that respect. You can't go from B to A by exchange, but you could go by selling 30 shares of B in the market and buying a share of A. Again, if that were being done at a loss, I think the IRS could well argue that they were substantially identical, but you could argue otherwise. Charlie?
No, I think the IRS would win.
Yeah. Charlie might even go state's evidence, if there was a thief testifying.